We're recording.
Perfect. All right, so it's 1 p.m. and we're gonna get started. Welcome everybody to our Cold Climate Grape webinar series. Today we are really excited for our topic on economics of establishing a small vineyard. And we have Trent Davis and Miguel Gomez from Cornell University. And Trent is going to be our presenter today, but Miguel is also a panelist with us. So if you have any questions, you can address it for both of them. We have just, some technical things. We will have a Q&A after the presentation is done, and you can go ahead and just add all of your questions to the Q&A or to the chat. Either way, we're gonna go through them at the very end. And so to get started, I'm just going to introduce both our speakers. So Trent Davis has a master's in applied economic and management from Cornell University, where he currently works as a research associate. He specializes in the economics of value-added agricultural goods and technology. Trent has presented research regarding the economics of vineyard management in New York and Virginia, as well as how the COVID-19 pandemic has impacted winery tasting rooms in New York. In 2020, Trent and Professor Miguel Gomez published a vineyard enterprise budgeting tool, allowing for small, medium vineyard managers, owners to estimate 25-year investment returns. And Miguel Gomez has a master's and a PhD in applied economics from the University of Illinois, and he is the Robert G. Tobin Professor of Food Marketing in the Dyson School of Applied Economics and Management at Cornell University. He is the director of the Food Industry Management Program, which is globally recognized as the premier food industry education and research program. Professor Gomez concentrates his research and outreach program on the economics of food marketing and distribution. He has conducted extensive research focusing on the grape wine value chains from production to distribution to consumer issues. We are very excited to have you both here, and I'm going to stop sharing and let Trent take it over.
All right, give me 2 seconds here. This going. First off, thank you so much for the great introduction. We appreciate the invitation to come and present today. Let's see. Oh no. Give me 2 seconds here. Come on. There we go. All right. Are you seeing the proper presentation now?
Yes.
Good. Okay.
Yes.
Sorry about that. Thank you so much, Amaya, for the introduction. Both Miguel and I are really excited to be here today. Like she said, we've done a couple of these studies here in New York. And what I've done is taken some of the findings that we found here for New York growers and changed them to better represent what you guys are seeing in Minnesota and Wisconsin and the surrounding areas for growing cold hardy grape varietals. So some of the findings we'll see today, hopefully, are mirroring what you're seeing on the ground in your areas and everything like that. But before we get started, Miguel, do you want to say hi really quick?
Yes, very quickly. Hello, and thank you for attending the presentation. We think this the tool that we are going to present is going to be useful for growers in Wisconsin and Minnesota. So thank you.
All right, perfect. So with that, let's get started here. So this is the cost of establishment and production for cold hardy grape varietals. Really quickly, what we're going to be looking at today, I'm going to give a brief introduction of how these numbers were formed, the research that we did to obtain them, and why they're important. Then we're going to go over some of the basic assumptions that are in our models, kind of talking about the vineyard size, grape prices, labor costs, a bunch of different things like that. We're also going to be talking about how the numbers from New York, how we changed them to better mimic vineyards that are in both Minnesota and Wisconsin. We're going to talk about some of the estimated costs that we got from using those numbers. Then we're going to look at our estimated returns. And then finally, we're going to end on what's called our budgeting tool. It's a vineyard enterprise tool. And essentially what it is it allows anyone who wants to download it. It's totally free. It's on our website. I'll be including it at the end of the presentation. But basically anyone who wants to download it, they're able to put in all their individual numbers for their vineyard to get return projections roughly 25 years into the future for your individual vineyard, right? So we're going to be showing you what's like a benchmark study. The idea is to kind of compare yours to what our numbers are showing, but then also you'll be able to download this tool and potentially find a bit more accurate numbers for your own individual vineyard that way, and more personalized numbers that actually represent what you're seeing on the ground. So I'll introduce that, and then finally I'll do a brief demonstration of what that tool looks like, and to show you exactly what I did to get the numbers that we're presenting today, because actually the numbers that I'm going to be showing you today I obtained by using the tool that we published. So I'm aiming for roughly 20 minutes of presenting the numbers that we found and discussing the research, roughly 20 minutes of talking about the tool, and then the demonstration as well. And so that'll leave us plenty of time for questions at the end, basically. So that's kind of what we're going to be going over today. If you have questions, feel free to put it in the chat. More than likely, I probably won't be able to get to it until the end of the presentation. But if Amaya or Annie or Miguel, if you see something that is very important that I should be answering during an actual slide, please let me know. That would be great. So with that, we're going to go to our introduction of what all of this means. So the base model that we used, the base research that we used, was a study that Miguel and I conducted last year, looking at the costs of establishing and producing cold hardy grape varietals around Lake Erie in New York State. And at the end of the presentation, I'll be including the link to that paper as well, in case anyone wants to take a look at it. But basically how we break it up is that we assume it takes roughly 4 years from starting a brand new vineyard, so 4 years from purchasing everything and planting, to become full production, to where you're getting full mature yields every single year. So we kind of break that study up into 2 sections. We take a look at all the costs and inputs that it takes, and that includes purchasing land, purchasing all the machinery, planting the grapes, what all those costs look like in those first 4 years. And we also take a look at what it means to be producing and growing grapes once the vineyards mature after year 4 on. And all of our projections are roughly 25 years long in these papers and that we've done. And why are these really important? It's obviously really important for everyone to understand where their business is going and understand where some of these costs are coming from and where some of these costs are growing as well, right? Because labor costs are going to be changing, potential machinery costs change on every single farm and those types of things. So creating these types of benchmark studies that we've done are very important for those who are managing their own vineyards to take a look at and understand, and then be able to compare their own vineyard against the numbers that we're coming up with. So again, to reiterate, the numbers I'll be talking about today, this is a benchmark study, which means we're not really representing any individual vineyard, and we're not saying your costs should be these. We're just using a theoretical vineyard that we obtained numbers by talking to vineyard managers and vineyard owners and whatnot to put into our models, and using that theoretical vineyard as our benchmark for others to compare their own to. Okay, so again, these are not suggestions, these are not goals for any individual person to be aiming for costs, but really just for you to compare it to. And the title of the research document is at the bottom there. Again, I'll be supplying the link to that at the end of this presentation. So with that in mind, let's go over some of the key assumptions that go into the actual research of the numbers themselves. So before I actually go onto that slide, I do want to let everybody know that when we do this type of research, we're looking at economic returns or losses, which includes every single type of cost you could ever think of. Essentially, we try to get as detailed as possible. So that includes things such as depreciation of assets, like yearly depreciation of a tractor, maintenance costs, labor costs, opportunity costs for doing something else with the land, and things like that. So some of these costs that you'll see in terms of individual budgets for individual vineyards or people themselves might not actually include them in their own thing, and that's okay. So you might think some of our costs, when I actually get to them, are a little bit high, but that's because we're including everything like depreciation and land costs and all those things. So keep that in mind when we're taking a look at the final costs as well. But some of the key assumptions that we have, so in the New York study, you'll see that's on the column on the left-hand side, and what I've changed for the Minnesota and Wisconsin changes are on the right-hand side. So I'm just going to run through the New York ones really quickly. But the idea was that along Lake Erie, there's a lot of very large Concord vineyards that are planted, roughly 200 acres, give or take. And some of these vineyards are actually ripping some of their Concords out, and they're replanting these cold hardy grape varietals to be able to diversify their offerings and also be able to create some different wine products as well with them. So in the New York study, we're assuming that there's 13 planted acres of cold-hardy grape varietals, but actually there's 200 acres of total vineyard management that's happening, or 213 actually, 200 extra acres of Concord. We're also assuming there's a land price of roughly $3,100 in New York. We're assuming there's 691 vines planted per acre using a 9x7 row plant spacing technique. We're also assuming that they've included drainage within their vineyard. We're assuming there's a sales price of roughly $606 per ton on average. And then there's estimated about 5 tons per acre. So what we did is I sent this report to Amaya, and she helped me send it to some extension agents who took a look at it to try to get the numbers to better represent what's happening in both Minnesota and Wisconsin, and then send me back these changes to put into our models. And so what our actual model today will be talking about is roughly 5 acres of planted cold hardy grapes, and that's it. So we're doing a very small vineyard, right? A relatively small one compared to New York size standards as well. We're assuming the cost of land is not part of this. We're assuming either for whatever reason, whoever has the land got either inheritance or whatnot, but we're not actually including land prices within this study today. That's something you can put into the tool yourself if you do decide to download it at the end. We're assuming roughly 807 vines are planted per acre using a 9x6 planting technique. We're assuming there's no drainage involved in the vineyard, so you're saving some costs there. We're selling roughly $2,000 per ton. And then again, we're assuming roughly 5 tons per acre for the grapes that we're doing. So you'll see that there are some significant differences in this model compared to that of the New York model. Again, these are all easily put into our tool that we'll be talking about later. But just so you know, we did change these numbers a bit to better represent what you're seeing on the ground in both Minnesota and Wisconsin. Okay. And keep in mind also, there's a ton of other things that went into this. These are just the basic ones that I wanted to point out, but there's also a lot of machinery costs, a bunch of different labor costs as well. So there's a lot of other costs that we're not going to necessarily touch on directly in this presentation, but you can take a look at in the documentation at the end. So with that, we are going to take a look at our estimated costs. So we're going to break this into 2 different ways. First, we're going to talk about years 1 through 3, which are those establishment years. So when you're getting the land, planting the vines, purchasing new machinery, all those things that it takes to get a vineyard up to maturity. And then we'll be talking about the yearly production costs once that vineyard is fully mature. Okay, so we're kind of breaking it down into 2 separate categories here. And again, remember, these are benchmark costs. These are what we get from our numbers. These are not meant to be suggestions on what yours should look like or goals for what yours should be. These are just what our theoretical vineyard has after using our models. All right, so with that, let's take a look at the establishment cost year. So again, this is years 1 through 3. So this is assuming you're starting a vineyard from scratch. There's no vines planted. This is assuming you don't have any machinery at all. You're buying everything brand new. So there's going to be pretty high costs that you'll see in this specific table here. Now, obviously, when it comes to individual vineyards, what people purchase, if they're purchasing it new, how much they're purchasing, how large everything is, that'll be very dependent and very variable for every single vineyard. So if you're taking a look at some of these costs and you're thinking they're outrageously high, well, that's because we, again, used the data that we obtained from the vineyards along Lake Erie, who were also growing Concord grapes, to obtain some of this machinery. So in terms of these smaller vineyards, which are roughly 5 to 10 acres, give or take, you might be able to save some money there by not buying every single thing that we've mapped out within our model here. So in terms of establishing 1 acre and this 5-acre planting that we're estimating for, 1 acre takes around $11,824 in total over that year 1 to year 3. So those mature years. Again, that includes the cost of planting all the vines. That includes the cost of machinery that we're then averaging out over a 25-year period. That includes all the labor costs and land clearing and all those types of things. So we're estimating it's roughly $11,824 per acre to get a brand new vineyard up and running. We're assuming a total cost roughly of $218,820 for machinery. And then roughly the planting and purchasing of vines cost that we're mapping out is roughly $3,827 per acre. Okay, again, one of the key differences that we're using here that might not be used in your specific vineyard is that we're assuming someone is using GPS planting services. Again, that's one of those things that we use here in New York State. Not everyone uses that. That's one of those things that you can change in the tool later on as well. But again, these are some of those assumptions that we're making that you might take a look at and say, I don't actually do that at my vineyard, I do something else. So keep these changes in mind. One thing we want to take a look at, here I'm going to move my cursor over here to kind of take a look at it. We have this pie chart here really showing where all the costs of establishing this new vineyard come from. Site preparation, I count that as year 0. That's essentially purchasing the land and getting it ready to plant. Year 1 is going to be the planting year. So that's why it's much larger cost compared to years 2 and 3, is that here we're actually purchasing the vines and planting them. It's very labor intensive and it takes a while, so it costs a lot of money. And then in years 2 and 3, and you're also purchasing trellising materials as well. So there's a lot of inputs in year 1. And then years 2 and 3, really you're maintaining those newly planted vines, those newly planted grapes, and making sure that they're maturing in a way that'll make them nice and healthy and happy when they do get to full maturity. And then obviously the most expensive upfront cost within these first couple of years is going to be that machinery cost, making up almost 80% of your total costs in those first couple of years. Again, machinery is going to be very variable for every single vineyard. It's going to be very different for every single person who wants to have one. So it's important to take a look at that number, but also understand that it's very variable. And then also within the tool that I keep mentioning, we do have a whole section so where you can change the costs of the types of machinery that you're using. You can zero some of them out if you don't purchase that for your specific vineyard, or you could add new machinery in that you think we might have missed or that you specifically bought for yours that we don't include in our models. So that's what we're estimating it costs to establish the vineyard and bring it up to maturity. So from years 4 until whenever our models again go to year 25. So from years 4 on, we assume that's going to be yearly production of a mature vineyard. And so we're going to take a look at what those costs look like now. So what we're taking a look at here, we're assuming growing costs, which that's going to take into account trellis maintenance, replanting of potentially dead or dying vines, planting new ones, pruning, sprays, labor, all those things. We're assuming it costs roughly $2,529 per acre to actually grow the grapes, roughly. We also have the total variable costs, which includes the growing costs, is roughly $3,192 per acre. And that variable cost there, so again, that includes that $2,529 per acre number above. And it also includes harvesting costs as well. And in the tool, you can do either hand harvesting or machine harvesting, either way. And then the total cost, that includes variable costs and fixed costs that we get per acre to manage a mature one, is roughly $10,452 per acre. The fixed cost you can see underneath there is roughly equal to $7,260 an acre. So this includes capital recovery, depreciation of assets, office supplies, any type of thing that you could think of that might include some sort of cost, either direct or indirect, we include in that. So again, some of these things you might find that you may not take into account, which is totally fine, because some of this is more for economic evaluation and not necessarily day-to-day budget operations. But these are our general yearly production costs that we find. And again, I'll show you how to find all of these things for an individual vineyard within our tool. Okay, so now one of the most important things is, after we take a look at all of these costs, what are our estimated economic returns per year? Are we profitable, or how does it look when we take a look at some of these things? So we're going to take a look at that now. And remember that when we talk about this, when Miguel and I are talking about this together, when we're putting together our reports, we are talking about economic profit and loss, right? So again, we are including some of these indirect costs, such as depreciation, which might increase the overall costs, and it might be something that not everyone wants to include in theirs, okay? So what we're taking a look at here is, given our assumptions that we talked about earlier. So remember, we're assuming we're receiving roughly $2,000 per ton for any grapes that we're selling, and we're assuming roughly 5 tons per acre. So we're getting roughly $10,000 in sales receipts per acre. Now that is above variable cost, right? It's one of the really important things that we want to make sure that we're covering in terms of business, is that we're covering our variable costs. So after variable costs, we're seeing $6,808 per acre. However, once we include those fixed costs and everything else, we're actually seeing an economic loss of roughly $451 per acre. Okay, and remember, that's an economic loss. So there's some things that are taken into account here that are a little bit different than what we take into account in action, like full-on accounting in terms of in our vineyards and whatnot there. So we are seeing a good number for $10,000 roughly per acre. We are covering our variable costs, which is great. But however, once we include all these types of both direct and indirect costs, we are seeing an overall economic loss for our specific vineyard in the model, our benchmark vineyard. We're seeing that it has a loss of roughly $451 per acre. Okay, so those are our general ones. Again, I'm trying to keep it roughly 20 minutes for it, so I'm at my time there. But when at the end, I'm going to be including the report of the Lake Erie study that we did, so you can kind of read a little bit more in a bit more detail about how some of these numbers are derived and how we found them. Like the numbers that you're seeing today will not be in that Lake Erie study, but you'll be able to kind of understand a bit more about where we got them. So with that, I do want to talk about our vineyard budgeting tool, because I think this is one of the most important things to take away from the presentation today, is that while these benchmark studies that Miguel and I have worked on are fantastic and they're very useful, at least I think they are, you have a way to go and find your own numbers that better represent your own personal situation. And I think that's a very, very important thing for everyone to be able to do. And so really quickly, what this looks like is the general overview of the tool is, again, you're going to be able to obtain your own estimates for your vineyard. And before everyone joined, Maya, Annie, and I were talking a little bit about kind of the genesis of this project and why Miguel and I started working on it. And last year, I went down to Virginia, gave a relatively similar talk about the economic costs of establishing and producing a vineyard. And everyone was pretty excited about them. They were happy with the numbers, but at the same time, one of the biggest feedbacks that we got was that, while these benchmark studies are really great for us to compare to, it'd be really nice if there was a very easy to use tool for me to download myself and put my own vineyard numbers in to get a better representation of what I'm actually seeing on the ground, instead of relying on these numbers that are coming from theoretical vineyards that someone else created. And so Miguel and I sat down and we talked about the best way to do that, and coming up with a very easy to use, a very accessible Excel tool was one of the ways that we decided would best help the industry as a whole. Okay, so that's essentially what this tool is. And that's why we decided we wanted to make it, is because we got a lot of feedback from people saying that they wanted something out there that was free for them to use, that was easily accessible, and that they could get personalized numbers for. So some of the things that you're going to be seeing in it, there's going to be a quick key findings tab. It's my favorite tab of the entire tool. You'll be able to see a cost of establishment. You'll be able to see your mature vineyard costs. And there's also going to be a 25-year projection as well for after taking it into account your personalized numbers. And then also, in terms of what we're able to change, you're able to change the majority of every single thing that I could think of that goes into operating a vineyard. And a lot of these tools, or a lot of these numbers that we got and obtained, as well as the processes, we figured out by talking to growers here in New York State. So again, they might be a little bit more biased towards New York growers and the processes that we use up here in New York State compared to what's being used in Minnesota and Wisconsin. But at the same time, you'll be able to change them to better represent what you're actually doing yourself. Okay, so some of these things you're able to change, such as vineyard layout, vineyard management costs, yield and sales assumptions, overhead costs, and these take into account everything from how many sprays you do, to how much the spray costs, to how much you're paying certain laborers, to how much you're charging interest on certain things. There's a lot of different things you can put into it, but it's very easy to use. Okay, so with that, I do want to switch my screen. Okay, are you seeing an Excel sheet now? I want to make sure.
Yes.
Okay, okay, perfect. So I'm going to show you two different versions of it. I'm going to show you the version that you will see when you download it from the website. Then I'm also going to show you the version that I used to obtain all the information that we've talked about today. Okay, so this right here, the one that we're taking a look at right now, this is what it looks like right when you download it. Okay, it brings you to this page. And essentially this first one right here is the general introduction of what we're doing. It talks about all the main assumptions that we put into it, how to use it, and all those types of things, a general introduction to what it is. And then here's all the authors that we work with to make it as well. And then if you follow my cursor, we're going to go to individual sheet explanations. You can take a look here. Again, these are all the titles and they're all color coded to all the sheets that you'll see here at the bottom. And these just go into relatively detailed explanations of what each sheet does, what you'll find on each one of them. And the colors do mean important things. So the two ones that you'll see in blue are just ones that are giving you basic information. The ones that are in this pink, salmon, orange color, I'm not exactly sure what it is. Those are the ones where you'll be changing specific information for your individual vineyards. So example, we have a general assumptions tab. And then we also have the machine and equipment and then trellis and drainage tabs. So you'll be able to change everything in there to have a much better representation of what you're seeing on the ground at your individual vineyard. And then the green ones that you'll see right here, which are called vineyard establishment and development results, mature vineyard results, and then quick key findings. Those are where all of our end results will be, all of your individual numbers, all of the really important information that you actually probably care more about. That's where all that will be. And I'll show you what those look like in a second. And then if we scroll all the way over here, these ones that are in black, these ones actually can't be edited. And there's a couple of reasons for that, but basically editing these makes it very difficult for all of the underlying equations to function like they were supposed to. So we actually locked them. But what they do give is a good example of the types of processes and the times that we're estimating that they take. So pruning, for example, or trellising maintenance, all those types of things, we go into details about how long we expect those to take, and then we use those times to then calculate the labor costs for that process. That being said, I'll go through and show how to do this, but you can essentially change all of those things on the results page, and it'll give you brand new numbers. And then we also give example of spray programs, herbicide programs, and fertilizer programs. These are just examples of what we do in New York State. Again, you'll be able to change the costs for your individual one, for your individual vineyard, to better represent the types of sprays that are being done in Minnesota and Wisconsin compared to what we have out here, because I know the pest management's different and the types of things you're guarding against will be different than what we see out here a little bit further east, okay? So with all of that said, kind of a general introduction of what it looks like, let's take a look at what a brand new one looks like when you download it. So when you go through and read all these things, you're gonna click on General Assumptions tab, and you're gonna get this couple tables right here, these tables right here. And what we wanna keep in mind is that some of them are already filled in, right? We'll see that these are again, using our base benchmark numbers that we've obtained from talking to growers up and down the East Coast, and in New York State as well as in Virginia too. So you'll take a look at these and you'll kind of take a look at it and decide, hey, I don't think, for example, let's say our benchmark one here is a 24 total acre ranch with 20 acres of planted grapes. Let's say, I don't think that's accurate for what I'm seeing. All you do is in these blue cells right here, you just put whatever you want to in. So let's say I want to put 10 acres total land with 8 acres of planted grapes. You do that. Now everything at the back end that's going to get you your results, they've all been updated already to show now what your costs will look like for this relatively smaller vineyard compared to the benchmark one. You can also change your row spacing, your vine spacing, and then this number right here will automatically calculate itself, so you don't have to really do anything. We wanted to put in 9x6. There we go, that updated to 807. Or if you feel as though that, for whatever reason, is not accurate for how many vines you're planting on a per acre basis, you can put whatever number you want to in. So let's say I actually want to put 700 in here. You can do that too. Now, keep in mind, if you do that, the equation that automatically calculated it by changing the 9x6 spacing, that goes away. So then you're kind of losing that a little bit, but you'll know how many vines you're putting per acre, roughly, I'm assuming. You can also put in information for deer fencing. It's assumed that there's not any, but you can put it down for yes. And then you tell exactly how many feet you've installed, how much it costs per square foot. You can also add drainage, yes or no. Bird control methods, you can add that yes or no as well. And then change how much those bird control methods cost per acre, roughly. We also go into expense assumptions, such as skilled labor, unskilled labor costs. We also look at gas and diesel costs as well. And then here's one thing that might be changed significantly is the types of planting that's being used. I know some of the comments that we received was that GPS planting isn't commonly used in Minnesota or Wisconsin at the moment. So one thing that you can take a look at here is just kind of figuring out how much does each individual vine cost when you're purchasing it, and then roughly how much does each individual vine cost to plant. Just put those new ones in here, and it'll automatically calculate you a brand new cost for planting. We can also take a look at different types of harvesting mechanisms here. So we have machine harvesting or hand harvesting. Again, you just have to change the percentage here. So if you do 50-50%, or if you only do hand harvesting, just put 100% into here. So 100, put 0 in here, and then everything changes on the back end again. Okay, it's that easy. Other layout expenses, for example, if we're purchasing land for a new one, again, we assume land price is 0. You can put in a new land price. You can put in the size of a bunkhouse. If, for example, if you have H2A laborers and you need to build a bunkhouse for them, you can put that in here. Also a shop size, you can put that in here on a per foot basis, how much it costs per foot. That'll automatically, per square foot, sorry. That'll automatically update, and all these types of things. So we also have a few other ones down here, as well as the information up here that takes a look at yield and sales assumptions. So in year 1, when we first plant it, we're assuming there's 0 grape production. Year 2, we're also assuming 0 grape production. Year 3, we're assuming roughly 50% production. And then in year 4, we're assuming full production after that. And then you're also able to put in your sales price right here for how much you're selling on a per ton basis. Okay, so remember that. And again, remember this is yield in tons per acre for these ones up here as well. And finally, one of the really important ones here is going to be the different costs of spray for insecticides, fungicides, and herbicides, and whatnot. So the spray include the insecticide and fungicide in one, and the herbicides and whatnot there. So these are all material costs, not labor costs. Okay, so these are all going to be material costs, and you can change that here. So these are going to be years 0 through 3. Again, your establishment years, and then years 4 on, we assume sprays stay relatively the same once the vineyard is mature. So you just put a single number in there, and then it updates it automatically. Okay. Again, this is what it looks like when you get the basic one, or when you get the one that you download from the website. I'm going to now change to the one that I've gotten and made edits to for this specific presentation, and then I'll show you what the results look like that way. So again, it looks the exact same, but I've already gone in here and I've made some changes to, for example, the size of the vineyard, the spacing of vines, the cost, the yields as well, and then also the spray costs for materials. So I've already gone through and done all of this to try to get a better representation of what you're probably seeing on the ground there, okay? So once we go through and do that, we can click on the quick key findings here, which I think is a very fun tab. It gives you 9 questions that are probably some of the most important ones, at least in my opinion, that you might be thinking in terms of how is my vineyard doing in terms of economic profit or loss. And so we'll go through here and we'll change a few things throughout the rest of the presentation to show how these change. But basically we'll take a look at if it's economically profitable. Again, that's a different thing than if it's actually accounting profitable. After how many years is it going to be net cumulative income with all this? What's the total investment to establish my brand new vineyard? What are my per acre receipts? What are my per acre costs? And then these last 2 right here are what are my break-even estimates for how much do I have to sell on a per ton basis, or how much do I have to produce on a per ton basis, given my base yields and sales price to cover all of my costs that I'm incurring. Okay, so I'm gonna take a sip of water really quick. All right, so with that, other very important things we're taking a look at here. This is what are year 1, 2, and 3. These are our general cost breakdowns that we're assuming. And one thing I want to point out, again, anything that's not shaded blue, so see how this is shaded blue over here, anything that's not shaded blue is not something that can be edited. Okay, only these cells that are shaded blue are things that you can select and then type in new numbers in. The reason why we do that is to make sure all the equations stay consistent throughout and that they don't break. But basically what we can take a look at here is the top of these tables shows our yearly sales receipts, so our yearly yields are going to be right here, and then how much we're selling them on a per ton basis, and then a total revenue for that year. Then we take a look at our costs, which we start with variable costs, which includes the site preparation year, which again, that was like year 0 when we first got the land. And then we have our pre-harvest costs and our harvesting costs right here. And These two right here, these pre-harvest and harvest costs, you can change specifically pre-harvest costs over here if you think these numbers aren't accurate, okay? So all of these numbers right here that we're looking at, so vines and replanting, trellis materials and construction, replanting and roguing, weed control, mowing, bird control, etc. All of these things are bundled up into one number and are assumed to be the total variable cost that we're seeing here. All right. So what we're taking a look at is, let's say, for example, I don't think that my trellis materials and construction cost almost $4,000. Let's say I got it and I was able to do it for roughly $2,000. I can take that number, I can put $2,000 in right here. That changed this number down here, your total growing costs, and then that automatically updates the table over here, which then changes all the numbers down here as well. And you probably noticed the pie chart changed as well down here. So these right here, these numbers have all been calculated using the inputs that you changed on the general assumptions tab. Remember that first one where we went through and kind of talked about all the different things we can change for each individual vineyard. But they're also shown here in a way for you to get the exact estimate that our tool is saying that each individual process costs. And you can take a look at it and think, yes or no, that does seem accurate, or no, I know that's not accurate because I have the exact number of how much I spent on fertilizing, for example, 1 year. You can change that, okay? So again, this is for those years 1 through 3 for establishing the vineyard, planting the vineyard, bringing up to maturity. Click here, mature vineyard results. Again, relatively the same. Don't look at any of this for right now. In fact, I'm just gonna zoom in. Maybe. Okay, no, apparently I'm not. So don't look at any of this right now. I'll talk about it in a second. But again, the same type of concept, the table looks relatively the same on this side as well. So again, all of these numbers right here go into your growing costs, right? So you can take any of them and you can change them to whatever you want them to be if you think our model isn't giving you an accurate representation of what each of these individual processes cost. That'll update this table right here. So then again, this is broken down into sales, receipts, and revenue are at the top. We have our total variable costs are right here. Then we have our fixed costs down here, our total costs, profit loss. Again, that's the number that's going to be this 10,000 minus this one. So to get that one right there. And then we have a quick break-even analysis at the bottom here, showing you exactly what the break-even price per ton and yield estimates would be given the costs that we just talked about. Okay, so that's this. So now let's talk about these other tables over here with a lot of colors are going on. So, and also one more thing to keep in mind, remember, only cells that are blue are ones that can be edited. Everything else stays the same or is locked. What this table right here is showing you is a sensitivity analysis on a per acre basis in terms of how changes in potential yields or changes in potential sales prices will affect the economic profit or loss on a per acre basis for your vineyard. And what we're looking at the top is what a plus or minus 10% or a plus or minus 20% yield increase or reduction would do on a per year basis. And then we're also looking at what a 10% plus or minus or a 20% plus or minus change for sales price would do for that year, right? For that economic profit or loss. This is important to understand and take a look at too in general, because obviously each year is different. Each sales year is different in terms of how much we're expected to produce or how much we're getting on a per ton basis for sales due to climate differences. For example, hard freezes, not hard freezes, large pest years, hardly any pests and whatnot will change yields and stuff like that. So that's the idea here. Again, all of these numbers, including how much the estimated yield is going to be and the sales price, all of these will automatically update when you change the stuff on the general assumptions tab. Does it by itself. Now this one right here is our 25-year projection per acre. One cool thing that we've added to this tool that I haven't seen in some other ones is you're able to include a crop loss factor. So let's say in year 10 of our vineyard, we have a really, really bad super late freeze for whatever reason, right? And it's so bad that we lose a lot of grapes. We can say that we've lost 75% of our yield that way. You put that in there, and then your returns all change, your cumulative income, has been changed as well. And then your average yearly income also changes that way. And again, all you had to do was change this one cell right here. Then you're seeing you only got 25% of the estimated mature yield. So you're getting 1.25 tons per acre in that year. You can also take a look at this right here, which is yearly percent increase in price per ton. So if we want to assume that each year the price per ton of grapes is going to go up a certain percentage, let's say we assume it's going to go up 2%, put that in there, automatically changes everything, right? We're seeing this now. If we're assuming it goes up 2% per year and our costs stay the same, we actually have an annual net income that becomes positive in year 6, an economic profit in year 6. We can also change yearly costs by whatever percent we want. So let's say we're assuming costs increase by 1% per year. We put 1% in there. Again, that still changes everything. A little bit on the back end, we see now after year 8 is when we start seeing an annual net income of economic income, right? And then we see that it takes roughly 26 years to get everything back. But again, all of these models that we're talking about today are assuming you're buying everything brand new, you're buying all new machinery, the planting needs to be done brand new and all those types of things, okay? And then really quickly, because I know I'm kind of running out of my goal time here, these two are very important sheets to look at as well. Here we have the machinery and equipment tab. I've blacked some things out here that I was told do not pertain to this presentation, and to be quite frank, I don't remember what they were. But when you download the actual tool itself from the website, this black will not be here. You'll be able to see exactly what those are. But you're able to see exactly the types of machinery and tooling that we're expecting to be purchased. Again, keep in mind, these numbers are derived from other studies here in New York State, which might require larger tractors or might require larger air blasters or herbicide sprayers and things of that nature compared to what your vineyard is seeing. So again, anything that's in blue you can change. So let's say my tractor price is only $40,000, just put that in here. And let's say I don't actually buy an air blast sprayer for whatever reason, you put a 0 in here, it'll change everything. And then your other numbers that we saw over here, for example, mature vineyard and results. Now, if you recall, we saw that it was going to break even or going to have an annual income profit in year 8. Now, because we changed those two things only, now we actually get it in year 4, right? And that happens automatically when we change it here. We also have years of life. We can change that. So if I expect my tractor to last 30 years, I can do that right there. It'll automatically change the total capital recovery and interest, salvage value, all these types of things. And then you can also change over here the hourly or how many hours you're expecting it to last, as well as how much you're expecting to repair it. And then finally, for this one, you can take a look at shop construction, bunkhouse construction, and deer fencing, and change the cost per square foot or cost per foot for the fencing, how many square feet each size is for the bunkhouse or the shop, and then also how many feet of deer fencing you're using. You can do that as well. And on this tab is trellis and drainage information. So if you're including the types of trellising right here, and then also if you're including tile drainage, you can change the information here as well. Again, it defaults to having drainage, I believe. But you can change that on the general assumptions tab. And then quickly, again, if you're interested in what these look like, these show all this information of a ton of different processes that we assume are needed to get the vineyard to become mature. Again, this is establishment and growing years. All this information, like all of these will not be showing. So actually I'll show you this one. This is what it looks like when you download it, right? Not all that information would be hidden. But this shows you each individual year, site prep, year 1, year 2, and year 3 types of processes. You can then click on mature growing costs. Again, same thing, talks about the types of processes we're assuming. And then the example spray programs as well are all over here. So that's the general tool. That's where we got the information that I talked about earlier in my presentation. So now we're going to go back to here. Yeah, so that's the general presentation I wanted to give today. I think it gives a relatively good estimate of some of the numbers that might be seen on the ground in Minnesota and Wisconsin. Again, what we're taking a look at here are benchmark numbers that we're deriving from a theoretical vineyard that we're just making, and they're not meant to be goals, or they're not meant to be suggestions of what yours should be, but just for something for you to compare to. And if you have any other questions that I can't get to during the Q&A session, my email is right here. Feel free to shoot me an email. And then with that, I'm going to stop sharing, and I'm going to drop in the links to both the Lake Erie study, so you can take a look at how our study was done in a bit more detail there, as well as the link to download the tool. So thank you for taking the time to listen to me today, and I will happily answer any questions that any of you might have.
Great, Trent, thank you so much. It's a great tool that you guys came up with and designed. I think it's going to be really useful for a lot of our growers. But before we start with the Q&A, I just have a poll with a couple of questions that I'm just going to put up here for our attendees to answer, while Trent puts some of the links there to the tool, this Excel sheet with all this information. Just gonna leave everybody to answer the questions. We have a couple of questions in the Q&A. One of them is from a prospective growers, and he's asking, what is a GPS planting?
Yeah, so it's a planting method here in New York, and that's commonly used. It is more commonly used on much larger vineyards. So if your vineyard's a smaller one, it's probably not something that would necessarily be appropriate. But it's one that essentially there's a tractor, I believe, comes in, and there's a planting mechanism on the back, and you're able to input GPS coordinates for how you want the tractor to go through your vineyard. And it automatically then goes and plants the vines for you, given those GPS coordinates and the track that you put into it. So it is a bit more expensive than other types of planting mechanisms. Again, it's mainly used for larger vineyards. That's one of those leftover numbers and leftover processes that really came from the vinifera studies that Miguel and I had worked on, as well as the Concord study, because those are much larger vineyards. That's anywhere between 40 to 300 to 400 plus acres. So that's why they're using that, which is, again, kind of why I wanted to point that out in the actual in the tool itself, to where you can change the cost of the planting in that tool by just changing how much each vine costs, and then your estimated cost of planting on a per plant basis. So it's a little bit hard to get around that one, and I know that's not a perfect way of having to do that for an individual basis, but that's the best way to do it, doing the tool. So I hope that answered your question.
Perfect. Yes, and we don't really, not a lot of our growers don't use that, because our acreage tends to be a little bit smaller. I have another comment here. A question says, are we free to use your tool and share it, provided we give some acknowledgement? The Montana Grape and Wine meets this weekend, and I'd like to share this tool with those members and friends.
Yeah, absolutely. So this is, if you follow the link in the chat, it'll take you to the place on the Cornell website to download it. This is free to use, and I would love for any and everyone who thinks it's useful to share it with as many people as possible. It is meant for free use, free distribution. I want it in as many hands as possible. I think it's a useful tool, and I hope other people do as well. So please share it. Yeah, that would be great. I'd love to hear how it goes if you do share it, and if people enjoy it or not. So thank you.
Great. Then we have another question from Dustin. Said, what is a good average production number that one can expect from growing grapes per acre, and general price levels of value of the crop? So that seems to be, the tool is great, but I guess that some of the prospective growers are wondering, well, like, how much am I supposed to get in terms of yield, or what would be an accurate price that I could get for these grapes? Where could where could they get some of those resources? And I know that you have it there already as an input in when you download it from the work from New York, but that might not necessarily be realistic to some of the yields that we get here in the upper Midwest.
Yeah, so the place that I got the estimates from mine specifically were from a lot of extension resources. I'm assuming there's probably some specific extension resources that would talk about yields in either Minnesota or Wisconsin that you might be more privy to than I am.
Yes.
But I know that Cornell Extension, for example, publishes reports, I want to say every year, talking about the average yield of certain varieties here in the Finger Lakes region where we're at. So I would suggest taking a look at your respective universities, Minnesota or Wisconsin, to take a look at their extension bulletins and outreach there, because I would assume there's probably some information there.
There are, and I would say just very, very general. I would say that, in the majority of the vineyards that we have here in Wisconsin, and Annie can jump in here for Minnesota, but I would say, the average of maybe, 4 tons per acre, 3.5 to 4 tons per acre is something realistic. Obviously, as you say, there's some years in which we get great yields and really good weather, and some other years when, if we are hit by some really cold temperatures during the winter, we tend to have a little bit less, but that's realistic. In terms of prices, that is something that, I don't know how you estimated those prices for those grapes. That's something that is so variable and depends on also whether, the vineyard also has a winery or whether they're just selling those grapes. That is something that, at least in our extension group, we don't have really good data on that, on prices of fruit.
Yeah, it's a tough one to estimate in general. I found data here for New York specifically that had ranges for Chardonnay, which was anywhere between like $750 to $3,500 per ton. It depended on the quality of the grape itself, it depended on who was growing it, and the buying time. So prices are extremely variable. It's hard to come up with general estimates for what it's going to look like. But we can assume that higher quality fruit sells for a bit more. So that's one of those things too to keep in mind. But I don't exactly know the best place to find that information for Minnesota or Wisconsin grape producers. Sorry, I can't give you a better answer than that.
I think that maybe a good place to get some of that information is also just to, if you're part of the growers associations, and those are kind of like numbers that are shared between growers of prices, that would be probably a good resource where to go and find some of those numbers. There's one of the attendees that says here that in Montana that the average per acre is between 3 to 5 and typically $1 per pound of hybrid grapes. So hybrid grapes tend to sometimes have a little bit lower price than some of the vinifers that are growing the Finger Lake and they're considered in the tool.
I'm seeing one question here in the Q&A as well. And Tim Pierce asked, does the spreadsheet adjust for inflation? If you recall, when I was showing those 25-year projections in there, there was a little tab that said, if I want to increase prices by X percent, then you just put whatever percent you want to increase your sales prices for. And then you can also put in how much X percent you want to increase your costs for. So it doesn't inherently account for inflation the way that it is. I leave that up to the user to put whatever inflation rate they essentially want into it. So it's just using that those two little cells that are under the 25-year projection tab under the under the mature vineyard results sheet. So it's you just do that, and then that'll account for whatever inflation you want, both for sales prices and for costs.
Great. We have a couple of two new questions in the Q&A. One says, do you have any recommendations for the type of legal structure for the business? In my research, I would favor a common type of LLC. And I don't know if this is.
Yeah, that's nothing that either Miguel or I look at for these things. Like, we're just economists, so we look at the numbers behind everything. I don't have a personal suggestion. I'm definitely not a lawyer, so I would probably talk to someone who either is a lawyer or has experience there to get a better opinion on that, because I don't want to steer you in the wrong way with legal advice. So
that sounds good. Yeah. Then there's another question that says, are you interested in feedback numbers? Or each person that uses your tool can feedback their actual numbers to you. This would allow you to make a report of usual assumptions, which could be very useful for planning.
That's not something that Miguel or I have talked about before. I kind of assume that who's ever using this is using it for their private information and may not want to share these numbers, because it is kind of difficult to get wineries and producers to want to share their internal numbers with these. Although if you would like to send me them, that would be great. I always like to see what it looks like, and it would be nice to kind of get a better idea of what individuals are using for and the types of numbers that people are seeing in different locations as well. So that would be great. It's absolutely not expected. Do not feel like that's something I'm asking from anybody to use this. But if you want to send it, that would be awesome, but I'm not expecting it at all.
Perfect. So we got a couple of questions through email, and one of those is based on your study, and this is a big question, is a 5-acre large enough, or should we be planting larger vineyards to be profitable?
So there's a million different variables that go into answering that. And so I'm going to be a very frustrating panelist and not give you a yes or a no answer there. It really depends on your capacity to produce. That's going to be a big thing. So just growing more doesn't necessarily mean you're going to make more money, right? You want to make sure that however much you're growing is still high quality. So some areas see if they grow a ton that their quality diminishes because they don't have the time to do a bunch. Also, labor costs increase, obviously. Your business model will dictate that as well. If you are a winery or if you're just selling grapes, that will change that answer significantly. So that's one of those things that definitely comes to a personal decision, especially when it comes to the hybrid varietals. That's something as well to think about. But I'm going to give you a frustrating answer and say that's very dependent on the individual and the business model as well.
It makes total sense. It's kind of hard to draw a line whether you're profitable or not.
And it also
there's so many variables.
Yeah, and it also depends too on like the machinery as well. That's a really large cost. And so some people might think, buying a brand new tractor for say a 5-acre vineyard seems to be an outrageous cost for that. Whereas if it's like a 28-acre vineyard, they might be more comfortable buying a new tractor because it's going to cover more space. But again, personal preferences. It's totally up to you and how you run your business. It's a lot of variables. It's hard to say.
I'm talking about the cost. I mean, that initial cost of machinery in the first year is pretty substantial. And one of the comments that Annie made in the chat is that she wonders whether in the upper Midwest, the grape industry should do more for, maybe sharing and renting equipment to decrease that initial cost, because that is pretty substantial, especially if you're looking at small vineyards. I mean, that's buying everything from scratch, that really, pushes, that profitability for over 10 years and not a great business model.
Yeah, so that's one of those big things. And when I came up with these numbers as well, and when I was making the changes for this presentation specifically, having the vineyard be 5 acres compared to like the 20 acres that the tool was originally designed for roughly, and then also the 40 plus acres that we're seeing out here in the Finger Lakes, the cost of that machinery is astronomically high. It's definitely one of those like shocking things to see. But like you're saying, the idea of sharing this type of equipment is something that could be a very reasonable response to these very high costs. We actually see that out here in New York as well. Some of the Finger Lakes wineries and vineyards are sharing equipment. It's typically the smaller ones that are doing that. They're also hiring people to come in and do some of these processes. That way they save money by not having to maybe purchase all of these types of machinery. That's another way of doing that. So it's definitely, I think it's a good idea personally for those smaller vineyards to potentially share equipment, but at the same time, that's also increasing risk because you don't know the person that you're sharing it, how they treat equipment, or if it breaks, who's going to pay for it? Like, how are you going to figure that out? So there are risks involved there, but it is something we're seeing here in the Finger Lakes. And from what I've heard, those who are doing it are relatively happy with the situation.
Do you know, this is one question from Annie also, do you know what does that equipment sharing look like in the Finger Lakes? Do they somehow split the cost of the implement?
So I've only had brief conversations about doing this with people. I don't know exactly. From my understanding of it, it was someone purchased it actually for their own use, and then they kind of began renting it out, and then that rental of their equipment then turned into more of a sharing type of situation.
Perfect.
It kind of evolved organically between interpersonal relationships between vineyard owners and managers. And it wasn't necessarily something where a bunch of vineyards came together and said, we're all going to buy this piece of machinery. You're going to get it this amount of days, you're going to need this amount of days. It really came from actual already personal relationships that were formed of people who were renting out equipment or who went to other neighboring vineyards and said, hey, I'm done using this for the moment. Do you want to use it for a couple of days? That's how it organically evolved. But I don't know how like the business structure is or the liability structure is or that.
Good. So somebody asked in the Q&A, are you aware of any similar tools that also incorporates winemaking profitability?
No.
I think that Miguel has something to say.
So that's something that we have in the makes. We did a cost for a boutique winery, and there is a report that we have. And about 5 years ago, I did several presentations, and my friend Brent Ross in Michigan State presented the very similar study to what Trent did today, but focusing on the vineyard, on the winery part, doing the, so there are some tools out there. They are a little bit outdated, but they are still available. But yes, that's more work we need in that area. And again, it's really different for different size of wineries, different business models, owning the vineyards or buying the grapes from outsourcing grapes. So, but yes, that's something that we have. But there are a few resources out there that I can share with Amaya and Annie to share with the group.
That would be great.
Miguel, do you know of any that kind of combine both the production side of grapes with the winery side? But because all I can think of are like the separate ones that you would use individually, right?
Yeah, they are separate. Always, you don't see that integrated. But even our integrated businesses that they grow the grapes and make the wine really appreciate separating both the vineyard business from the winery business. And I think just a brief comment on the prices, that's very tricky in the Finger Lakes because many of the wineries make their own wine and they buy, so the wine market is relatively thin because most of the business are integrated. So these prices fluctuate a lot, but even completely, so what they, in my conversation with the wine industry in New York, they usually, when they look at this tool and they look at prices and yields, they usually look at the range. They do kind of a sensitivity analysis on prices and yields because it's very different. Prices because they are very different because the market is so small that there is a lot of variation and different, even regional differences. And yields because of the location of and the type of grapes that are grown in the different vineyards.
Great. Well, it's 2:04, so we're gonna wrap it up. And I really want to thank Trent and Miguel for the information, for the tool. We will be posting the recording of this webinar in the Wisconsin Fruit YouTube channel that we have, and I know that Annie for the Minnesota growers will also be posting it, and we're going to include also send to everybody that attended the webinar the links that Trent and Miguel share with us to get the tool. Somebody was asking if there's a possibility of getting your slides, Trent, if you would share with them. I don't know if that is possible. If not, they can always go back and watch the videos that are going to be posted.
I was just replying to that comment. I'll send you the slides if that works.
Perfect. And whoever wants it, they can just either send an email to me or to Annie, and we can forward that.
Perfect. So I'll include that with all the other documents that I'm including in an email for you. So.
Wonderful. Thank you so much for presenting today. We really appreciate all the information that you share with us and our growers.
Yeah, of course. We had a great time. Thank you so much for inviting us. We're happy to share everything we did. So thank you.
Thank you.
Thank you, Maya and Annie. Thank you, everybody. Bye.
Bye.